finance, did that for 3 years. Throughout that process as well, I got involved in terms of, I found out about the CFA program during university. So I began that journey. Originally started through, there's a CFA UK investment management certificate. So that's what kind of opened my mind towards the world of investing, the world of finance. And that's essentially where my journey began. At that point, when I finished university, I was quite clear in my mind after doing accounting and finance that I didn't want to do accounting. I was more interested in the finance aspect and the investment aspect of it. So I moved back to Nigeria, and at that point, my interest was more towards asset management. So that was where I was, looking for jobs in that industry. But fortunately or unfortunately, I found myself in investment banking, which was great for me because it helped me gain like the foundational skills in terms of finance. So in that role, I learned, research, financial analysis, financial modeling, presentations, essentially everything you need, your foundational skills. Learned networking and building relationships with people. So I did that for about 4 years, to which, so I worked mainly in the debt capital market, so working with, corporates and even the Nigerian government trying to raise money in the capital markets. But after doing that for a few years, about 4 years, I kind of got bored. And then at that point, I had completed my CFA program. So it was a question of what do I want to do next? Around that sort of time as well, I was fortunate to be involved in an M&A transaction, which was very interesting for me because part of one of my problems with the debt capital market transaction is essentially you raise the money and you move to the next one. You're never involved in what happens next after you raise the money until they want to raise another tranche that they come back to you. So I always used to wonder, okay, we've raised this money, we've raised this 10 billion, 20 billion, whatever. What happens with the money? Is the company actually using the money for what they is the money accretive to the company? Are they using it for what they said they were going to use it for? So I found myself on an M&A transaction, and I really liked it. So it made me start thinking, okay, maybe that's what's next for me. I did my research, and then I ended up in private equity at Verod. So I've been with Verod for about 3 years now. Verod is an African private equity firm. We invest across Nigeria and Ghana. I'm based in the Ghana office, and I've been doing that for the last 3 years, and it has been really great. Steep learning curve, but also hugely mentally stimulating, and we are working with some of the best people in the industry. So learned a lot, but that's essentially my journey from a high level.
Hi everyone, nice to be with you today. My name is Dolapo Salawu, and quite like the rest of you, and similar to Ekoh as well, I am Nigerian born and raised. Actually, but born and raised, if I'll put it that way. So if there's anyone who didn't grow up in Lagos, I was just like you a few years ago. I did my high school in Ibadan. Like I said, I was born there. So actually did all my schooling there until recently when I got my MBA, right? So did my high school in Ibadan, went to a school called Orita Mefa Baptist Model School. And then after my high school, I proceeded to University of Ibadan, also in Ibadan, right? And I think sometime in my 3rd year in university, I came across something called investment banking. So at the time, which is still on as of now, at the time, I think Bank of America and Goldman Sachs had just started recruiting Africans for roles in London. So in my 3rd year, I went through an investment banking training program just because I was like, oh, okay, maybe that will increase my chances or my odds of getting into investment banking in London. And luckily, I was able to do this. So in my 4th year, I did an investment banking internship at Bank of America in their London office, which was in 2015, I believe. And then I got a return offer to do a second internship. I did that again in 2016, after which I moved back to Nigeria. Unfortunately, this was a time when, whoever is familiar with politics in the UK, this was a time where Brexit had just happened. And then it became much more difficult for firms to sponsor internationals. So unfortunately, I was one of the few folks who couldn't get sponsored by Bank of America. So that meant I had to come back to Nigeria. So I moved back to Nigeria, and then I worked at two investment banks. I worked for a bit at United Capital, after which I transitioned to Coronation Merchant Bank. I spent about, I'll say, a year, 6 months at Coronation Merchant Bank doing investment banking. I'd always known I wanted to transition to private equity, right? So similar to what Ekoh was saying, it's one where in investment banking, essentially, you're advising firms, right, in different ways. You're advising them essentially on capital raising and also mergers and acquisition. So M&A or mergers and acquisition essentially means either company A acquiring company B, or you can have a merger of equals where two companies of relatively equal size or the same size come together to become one company. And obviously, we've seen several of those in Nigeria, especially within the financial institution space, right, where very recently you had Access Bank acquiring Diamond Bank, right? And there are very many examples of that happening. So for me, it was one where I'd always known that I was always going to transition into private equity. So that meant that I knew that my days were done in investment banking, and I wanted to, which is part of the reason why I joined Coronation Merchant Bank at the time, because I wanted to join a firm where I could learn very quickly, and then it could help me transition very quickly into private equity. Just because I love investing, I love learning more about companies, I love also being involved, not just in the financial aspect, but then even in terms of directing the strategy of businesses as well. So and that's what attracted me to private equity, which, unlike investment banking where you are an advisor, right? On the private equity side, you are actually doing it in terms of you've raised a pool of funds, which is typical for most private equity firms, where you raise a pool of capital, and then from there, you then invest this capital, right? Initially, obviously, private equity started from the US, where people, where essentially it was called leverage buyout, right? Which is essentially borrowing money to acquire a company, right? Which is very similar to mortgage. If anyone is familiar with how mortgage works, right? Where you're borrowing money to acquire a house, right? And then you put a bit of equity, which is your own money, in there as well. So essentially, that's private equity. And there are different forms of that which we can get into. But so I moved from Coronation Merchant Bank, and then I joined a firm called African Capital Alliance, which is one of I believe African Capital Alliance is the first private equity firm in Nigeria. And I was there for about 3 years. I started as an analyst, got promoted to associate. And then I left in 2021 to get my MBA at the Wharton School. Actually did a dual degree, got my MBA, and also did an MA in International Studies at the Lauder School. And the reason for that for me was I had always sort of wanted to move to the US to do private equity investing for various reasons. One, it's the largest economy in the world. Two, private equity essentially started from here. And then the third reason also is I believe that the deals are much more interesting here. And I would explain that in the sense that in Nigeria, yes, even though we call it private equity, we do more of growth investing just because or even in Africa in general, we do more of growth investing just because of the size of the market and the stage at which the market is as of now. So I wanted to sort of do, if you would say, larger transactions and then more interesting transactions. So I decided to get my MBA, came to Wharton in 2021. During my MBA, I interned at a firm called Brookfield, which is more or less the second largest private equity firm in the world. I was doing real estate private equity there, where essentially I was invested in real estate transactions across the different types of real estate, which hopefully I hope we'll get into that as well to talk about in terms of the sectoral split and also even strategy split as well within private equity. And then at the moment I work with Morgan Stanley, which I believe a lot of people would know. I work within the private equity team at Morgan Stanley. So most people know Morgan Stanley as an investment bank. But outside of investment banking, Morgan Stanley has two other businesses. One is wealth management, and the other is investment management. So my team sits within investment management. And then also within investment management, we're a subset called Morgan Stanley Private Credit and Equity. So I sit within the private equity team there, where I essentially do both growth investing and also buyout. I guess across the world, my team sort of sits both in the US, London, and Hong Kong, and I'm in the US office, sort of just pursuing private equity deals.
So, Ekoh, what do PE professionals do? Like, can you just break down what you guys actually do? How is it different from an investment? I know Dolapo has mentioned that investment bankers are advisors, but in real terms, can you just break down what your activities look like?
Okay, thanks. So just carrying on from where Dolapo stopped, private equity, essentially you are combining your investment skills as well as operational skills. So if you take investment skills, or even take a step back, what you're doing as private equity is you have a pool of funds. So you've raised funds from large institutional investors. This could be DFIs, pension funds and the likes. You've put it into a private equity fund vehicle, and then your job as the your job as the fund manager is to look for attractive investments to be able to invest that money, hold it for a holding period that could be anywhere between 3, 5, 7 years, and ultimately the goal of this investment is to return funds back to those investors. So as the private equity team, your job will pretty much be, one, you need to find these opportunities in the markets you're operating in. So deal generation, origination, that could be from looking at what's growing in the country, company performances, and so on and so forth. So the first aspect of whatever you're doing in private equity is just generating those opportunities. When you generate those opportunities, then it's the next stage of assessing whether it makes sense or it's attractive enough to be able to return funds. Does it meet your investment criteria, and is it attractive enough to return capital back to your own investors? Every fund will have its investment criteria. As Dolapo said, you might be a growth fund in terms of you're investing in companies where they're not as mature as some other companies, but if you're able to introduce some structures in place, they're able to scale relatively quickly, and you're able to invest and sell them off after 3 to 5 years. Or it could be buyout, where you are just replacing capital. These are mature companies. You invest in them, their cash flows are pretty much steady, predictable, and okay, there's a relatively high probability of getting dividends or interim cash flows. As Dolapo said, you can also introduce some debt elements into them because they've been operating for quite a reasonable period in time. So after your deal, after you've done this deal assessment, it's the most important part for us in Africa in terms of Dolapo is in the US. He's able to use debt to structure his transactions, but as we are in Africa, debt is what, 20 mid-20s percentage. So it's a little more complex for us in terms of doing leverage buyout. So what we focus on, especially at Verod, is just value creation. During the deal process, you would have done a bit of due diligence, working with consultants, industry experts to just say, okay, this is the company that we're interested in. What do they do well, and what don't they do as well? So in terms of what they don't do as well, you would have seen elements where you can introduce, it could be talent, you can hire new management to help scale the business. It could just be putting in structures. Some of these companies might not even have a board. They might not even have a strategy that they're working to. And those little tweaks could be what helps you grow the company 3, 4, 5 times. It could be synergies with other companies within your portfolio. So you might have a manufacturer of drugs, but you also buy a retail chain that can help distribute those drug products. So there are certain areas where there are 1 or 2, 3, 4 things that you can do to, help make these companies more, help them grow essentially. So that's the value creation aspect of it. And then finally, you're not investing for a lifetime. You're investing to be able to return capital back to your own investors. So the last part of it will be just, preparing for exit, speaking to other investors, looking for who is interested in your assets, and then, ultimately selling these companies for, a return. Hopefully a return at a valuation higher than what you paid for it to enter. So it's the investment side of it in terms of deal origination, analysis and execution and exit. But then between entry and exit, you have a lot of operational things you're doing. So that's where your strategy and your value creation comes in. So in a nutshell, that is private equity.
The only addition I will add is, so as I mentioned, so you can think of private equity along different strategies. So as I was saying, you could be a growth investor, right? And you could also then be more like a buyout. But then the other thing to think about is then other firms. So in Nigeria, you find that a lot of people are generalists. And what I mean by generalists is most private equity firms in Nigeria would invest in every sector, right? But when you move to the US, you find that their funds are typically specialists, right? So you can find a fund where all they do is they only invest in the financial services sector. You can find a fund where all they do is real estate. You can find a fund where all they do is infrastructure. A lot of people here probably know Bayo Ogunlesi from Burna Boy's son. So Bayo is a Nigerian who founded one of the largest infrastructure private equity firms in the world called Global Infrastructure Partners. And what they do mostly is just infrastructure. So they would invest in ports, railroads, airports, and then utilities like water companies or power companies and all that. So there are then different aspects of that. So as you're thinking about investing, then it gets more specialized, especially in the developed markets. Obviously, in Africa, most of our markets are still less developed. I think the only specialty you'll find in Africa will be maybe there are a few folks actually who actually invest in infrastructure. AIM is one of them in Africa. Also, you have I think there's Africa Plus Partners or something in Nigeria who also do infrastructure, but you also then have real estate. So like ACA, where I was, there's a specialized real estate fund. I think Actis also has a specialized real estate fund in Africa. So there are a few folks like that. Where again, there's Sile Capital in Nigeria, there's Njaro in Ghana, where they do only agri, right? So as you think about it, then you also have to then start thinking about specialty, where there are folks who do specialized sectors, there are folks who are generalists. So even as you think about it for a career as well, if it's a case where there's a particular sector you're much more interested in, then if there are specialized funds, then you can go join them. Also, the other thing to think about is there's some people who do hybrid, right, which is a mix of private credit, which is debt, and then private equity. I think one good example of that is Vantage Capital, which is based in South Africa, where they do a mix of hybrid. And the reason why people do that is they want the upside of equity and also the downside protection that debt provides you. And that's why they will do hybrid, and there are different hybrid instruments that people can utilize.
Excellent. All right. Okay. So one of the recurring themes that I've heard here is that debt in Africa is expensive, and given that it's increasingly difficult for deals to be for us to have a lot of private equity vehicles, if I may say that, in Africa. Given what you are seeing, do you think that is going to improve in anytime in the future? Do you think there's going to be any improvement in the private equity scene in Africa? Do you think it's maturing? And what are the tailwinds you are seeing to drive that?
So you're right. Debt is expensive in Africa, but another thing we also see a lot, as Dolapo said, is that private equity essentially started in the US. In Africa, it is still, in the very, 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 very early stages. We're essentially not even scratching the surface. So there's still a lot of development to be done. At a macro level, our economies are growing. So I think it's an industry that will develop as the economies develop. There's also a lot of education that still needs to be done around private equity, in terms of even as company owners, we enter the room with a lot of company owners who still they're not aware of private equity. They don't know. They think, some of them, you speak to them and they think, oh, these people are here to take away my business. No, we're not here to take away your business. We're just here to partner you to grow from one stage to another stage. You enter other rooms, as you said, they think you are a bank and you want to lend them money. So there's still a lot of growth to be done in terms of the education aspect of it. Yes, in Africa, everything is a risk. You wake up today, FX can kill your whole investment. Inflation can kill your whole investment. I work across Nigeria and Ghana. Last year, Ghana was the one having FX issues. This year, Nigeria FX issues are going crazy. So it's certainly interesting. You learn every day. Another thing, as Dolapo said, is that downside protection is two words you hear a lot in terms of private equity, especially in Africa, but across the globe. So from my point of view, yes, it's a growing industry. There's still a lot of development to be done in Africa. We're seeing African economies return to levels of growth that we were seeing prior to the pandemic. So as those economies grow, the more types of deals we'll see, the more interest in private equity and investing generally that we'll see.
One key thing that would drive growth in Africa private equity is this. So if you think about private equity, where private equity investors essentially invest in companies, right? And as I said earlier, the African market is still very much at the developing stage. Reason being that there are not that many companies that are attracted to private equity, right? If you think of the US, the reason why private equity is thriving, it's just because if you look at several other places, several states across the US, there are multiple different companies that you can acquire, right? These are companies where the founders, some of them are founder-led. The founders have sort of grown them to a point where institutional capital can then come and then take them to the next level. And that's one big challenge I think exists in Africa, where there are a lot of companies where even though on paper they might look attractive, but they just don't have the structure yet to attract institutional capital. And a lot of it might be where it's a founder-led business, but then they don't keep proper books of accounts, or there's no proper succession planning, where there's just a lot of every lifting that has to happen there. So I think one key thing that needs to happen is there has to be, I'll say, enough supply of good and quality companies on the one hand, such that it then becomes very attractive for private capital to get involved, to take them to the next level. I think the other hand also is, I think exit has been very challenging. So as Ekoh mentioned earlier, with private equity, you are buying a business, but not to hold it forever. You're buying a business with the intention of turning it around and with the intention of making money, because that's also how you make money as a private equity investor. So most times you are looking to double whatever money you've invested, right? And to be able to do that, there also has to be people waiting to buy these companies from you. So as I mentioned earlier, because the industry is still very, very new, so exit has been one big challenge also for Africa private equity firms, where even when you have a good portfolio company, maybe you've doubled the EBITDA or revenue or whatever metrics you want to track, but then finding a willing buyer has also been a challenge, or even finding someone who is rich enough to write a $10 million check, a $20 million check. There are not that many people that exist in Africa in terms of individuals or even in terms of corporates, let alone private equity firms that can do that. But whereas in the US, even if you don't sell an other developed market, if you don't sell to another private equity firm, which you call a financial buyer, you can sell to strategic, right? And there are enough of them to buy these companies off you. So I think it's one where, which is the good thing is now we have and if to answer, I think I saw someone asking what's the difference between venture capital and private equity. And if you look at the US, it was a case where there was a lot of venture capital funding to a lot of startups or founder-led businesses. So there's a role that the government has to play in terms of creating an enabling environment for people to start medium-sized businesses or even startups. And then gradually, usually what happens is if you have an idea, you go to a VC fund, you don't go to a private equity fund, right? If you go like Vera, for instance, as a VC fund, from your ideas being incubated in a Vera VC fund, for instance, then gradually your business grows. Then you go to a growth equity investor who gives you the next. I think the first thing you do is maybe your family and friends sort of invest in your idea. Then after you've done your proof of concept and you're like, okay, you know what, looks like we can monetize this idea, you go to a VC fund who then gives you your initial capital. Then afterwards you raise Series A, Series B. Then you move to growth investors who help you fund your idea up to the point where you're at least EBITDA positive. Then when you get to EBITDA positive, that's when PE folks then get involved. So, but what has happened with Nigeria is that there's that massive gap in between, right? Where we have a lot of VC investing, and then we have private equity firms on the other end. But there are not that many firms in the mid-market space, if we put it that way, where they're mid-sized, where they've grown to the point where they're making revenue, they're EBITDA positive, and then what they need is then the next level of growth, which is where private equity is supposed to come in. So there's still a lot of there's a missing gap there, which hopefully we can fill that in the next 10 years, and then that can then drive growth within the private equity space as well.
Excellent. So just to summarize to our audience, what they've just said is for a business cycle or for a business lifetime, when you begin, you essentially like raise capital from your family and friends. Afterwards, you probably go to a venture capital company when you have proven your concept. Let me use like an example of a company I can use, maybe InterSwitch. When they began, the founder maybe in the beginning raised money from his savings, personal savings, family and friends, and then moved to the next level, which was venture capital after he has gotten to a certain stage. Afterwards, venture capital like took it from say, let me just use simple numbers, say from 100,000 naira per year to like ₦1 million per year. Then once he has gotten that steady, a growth fund comes in to just take it to the next level. Probably, I think growth funds would be like the ones that makes the most impact, maybe in terms of putting in place structures and taking you to like an explosive era where you have more predictable revenue. Afterwards, then maybe private equity buyer can come in to like, you know, invest and take it to the next level. So that's typically how it works. So in line with this, looking at your careers, for example, some people here want to like go to the next level in terms of like they're looking at private equity as a career option. And there are a lot of people that are in different places. Some are fresh graduates. So let me start from that particular audience. Say there's a fresh graduate that's interested in private equity, maybe studied economics or accounting. In your experience, what do you think somebody like that should do? The next steps they should potentially take to be ready for a career in private equity?
And trust me, I was probably like a lot of you guys, and to share a personal example, as of my second, and most of you are probably even in a better place or even better prepared for this career than I was. In my second year, I did not even know what KPMG or PwC was, right? That just shows you how much I did not know even as of my second year. And then, but by my third year, I was interviewing for an internship in London. So that just tells you also, in terms of what you don't know, but how much you can also learn if you're inquisitive and you're curious enough to sort of fill that knowledge gap. So what I would advise to someone who, maybe you're even hearing us say revenue, EBITDA, and you have no idea. And by the way, you don't need to have studied economics, finance, accounting, and all of these things. You could be an engineering student. It's not rocket science. Anyone can learn finance. Anyone can break into investment banking. I think the key thing is to have that strong desire, right? And how do you know that you have that strong desire? I think even when I was clueless about these things, I was always curious about things I read in the news, especially the business news. Where they say, oh, Nigeria's inflation is at this. What does that even mean? And how does that impact you as a person? Or if you read in the news, or Access Bank has acquired Diamond Bank, what impact does that have on you? So if you're curious about things like that, and thankfully we're in a world where the internet is on your mobile phone, and that's where, in fact, that's all you need, if I'll put it that way. That's a very basic thing you need, where you're very inquisitive and you're Googling and you're checking these things. I think that's the first place to start. And whatever questions you have, thankfully, you have even things like ChatGPT and the likes these days, where the answers are readily available. But I think the first and very first thing is to be able to succeed in either investment banking or private equity, or even in finance in general. You must be a very inquisitive person. You must be someone who is willing to learn, because every day you're learning. Even till now, I'm telling you that I could see a new concept that I've never heard of, and that's not foreign, right? So you must be someone who's always willing to learn. That's the first. I think if you then think you have that kind of mindset, the next thing I'll then say is, I have this saying that you can't become what you cannot see, right? I think the first thing is you need to study and find out the people who have made that transition. What did they do, right? Like I said, I went through the training, and again, that's because I knew that I could not learn to be an investment banker within the university, right? Unfortunately, Nigerian universities do a terrible job of preparing you. I don't know if that's changed, but at least when I was in school, they do a terrible job of preparing you for life after school, right? I think Nigerian universities prepare you more to be a master's student than anything. So because I knew that, and I knew that I couldn't learn anything I wanted to learn within the school, I then took it upon myself to take an investment banking training. So I did Talent Mind. I don't know if it still exists. So I took an investment banking training called Talent Mind, where I think for a period of about 3 months, I was traveling to Lagos every weekend just to take weekend classes. That's where I learned about Excel. I learned about financial modeling. I learned about accounting and all this kind of fancy stuff that you eventually learn. I think you don't have to do the same. I think these days you can even learn this by your own self on the internet, right? But again, this was 2013, 2014. The internet was way slower than it currently is. And honestly, we didn't even have access to as much resources as then. So I had to pay to learn this. And then once I learned those skills, unfortunately as well, there are not that many places that are willing to train you as well, especially in Africa, right? So sometimes you want to get that skill set to be employable. Ideally, you would have said, oh, you don't need those skill set because you're just out of school. You should be employed by some place where they're going to train you. But that's not the way it is. And also because there are not that many roles available, right? So to distinguish yourself, I'd advise, learn the skills. And they're very basic skills of how do you build a PowerPoint? How do you do a good PowerPoint presentation? How do you learn the basics of accounting, basics of economics, basics of corporate finance, then basics of building a financial model? I think once you have the skill set, right, then I think the next thing obviously is then to try and get a job, right? There are some firms that have graduate training programs. Like I said, Coronation had one. I didn't do graduate training, but I know they have one now. Stanbic also has one. But for firms that don't have graduate training program, unfortunately, you have to reach out to people by yourself. So I can't tell you, and that's even up until now, right? In terms of getting a job, I don't think you can't sit down and hope that a job comes to you, right? So I think you need to, by your own self, develop a great CV. Like I said, you can do that online as well. If you just Google sample of great investment banking resume templates or whatever, you find that. So have a good CV, then by yourself, cold email people either on LinkedIn or even cold email them by their email. You can find email templates online as well. And just email people and just tell them, hey, I've taken this training. I think by now I'm an average financial modeler, but I believe that blah, blah, blah. I can join your firm. I can learn. I can also add value or whatever, right? You just have to reach out to people and then hope that at least you find one place where they're going to give you a chance. And then that way you can then learn the basics. And it could also be private equity firms. Usually private equity firms don't hire at the analyst level, but maybe they feel. I know that in the past, Vero has hired straight from undergrad. African Capital Alliance, where I worked, they don't do that. Usually they hire people who have done 2 years of banking. And also even in the developed world, usually you do investment banking. And then from investment banking, you then transition to private equity. So what you want to do is, and there are minimum 20, maybe 30 investment banks in Nigeria, and at least they would hire one person every year. So you just want to give it all of your chance and all of your odds. You have to be a go-getter, unfortunately. It's also a career where you work hard. So that's probably something else you need to think about. Are you someone who is happy to work till 12 a.m. sometimes, even sometimes 3 a.m.? I can tell you times when I've worked weird hours. But again, when you're just learning, it's that way. You might just be doing a stupid research and you're at the office at 6 a.m., right? But now I don't work that crazy hours anymore. But then I paid my dues, right, before now. So I think that's where to start. Start from investment banking. And those are some of the things you need to do to break into investment banking. Obviously, interview process is another ballgame. I don't know, Ekoh can talk about that. But I think the first thing is to have that mindset and prepare yourself with at least the basic skills that you can either get through Google or through formal training. I know there's EduBridge, there's Talentman, like I said, and there are probably other trainings I don't know of now, right? If you find them, don't worry, pay for it. Your return on investment is, I can tell you for a fact, 1,000 folds. I probably paid Talentman 30,000 naira when I did mine in 2013, 2014. But I can't tell you what I make now, right? So that's what I'm telling you. The return is 1,000 folds. So if you have to pay for it, please pay for it. If there's an online class that you have to pay for it. Learn these skills because it will serve you forever. Even if you end up not doing private equity, these are skills that you can use even in any other career, either consulting or whatever things you end up doing. Yeah.
I think it's investing, right? Even, Warren Buffett or whoever is the smartest investor will have a few deals that don't work. Even in your personal life, in terms of you trying to do something and then at the end of the period is not what you thought it would be. It could be any reason. At the end of the day, we're investing in companies which are run by human beings. You might have missed something at the investment stage. It could be a macro effect in terms of no one could have predicted COVID and that's killed your investment. It could be a myriad of factors in terms of why deals go wrong. But yes, in private equity, deals do go wrong. You might have a fund of 10 investments and 1 or 2 go wrong. But at the end of the day, because it's a fund, you're looking at it on a consolidated basis of the fund in general. So rule of thumb is just if you've done your due diligence, if you've done your homework, you have more deals obviously that will do well and that will cover the 1 or 2 that might not go wrong. But anyone telling you that all investments done by private equity firms or investors in general do well, it's a myth. This doesn't work that way. You'd find deals that you don't even make one naira or 1 cedi back from. So I'll just allow Dolapo chime in as well.
Yeah, I'd say in my experience, there are 3 key things that I've seen sort of make deals go wrong. And by the way, when we say deals go wrong, it's in myriad of ways. If you're lucky enough when they do goes wrong rather, you at least get the amount you invested, which is one-time return, right? That is if you're lucky. And sometimes if you're unlucky, you can lose all of your investments, like 100% of it. And there are 3 things I've seen. One is when a business is over-levered, when you've used too much debt. 2 could be technology risk, right? You've invested in a business where you think, oh, this is new technology and it's good, but all of a sudden, new technology comes in, like ChatGPT, for instance. So you see, I don't know if folks follow the news, you'll see recently it was said that Vista, which is one of the largest tech investment firms in the world, they wrote down an investment that they made, which is within the education space, right? And that's because all of a sudden now people can learn from ChatGPT and do different kind of fancy stuff from there. So there's technology risk where maybe you add a payment solution using SMS, and then all of a sudden someone comes with a different type of payment solution, right? So, and then finally, there could be fraud, right? So where maybe there's fraud going on in the business, they're not doing proper accounting, and then you had no idea, and then that could happen to you. So different things could happen. So that's why a lot of times we spend huge amount of time on due diligence, and we do different types of due diligence, right? Even to us, sometimes, especially in Africa, you find out that people even do background checks to check what's the nature of the family that the founder is from, just because literally you have to assume that anything can go wrong, right? And you do background check, you want to know the net worth of this founder. Are they owing anybody? Have they defaulted on any debt, even if it's their own personal debt? You're doing different types of due diligence check, and that's because you want to be able to mitigate risk, such that if there's anything you found, if it's something that you can easily correct for or mitigate, then yes. And even sometimes you walk out of a deal. So a lot of times, most PE firms only invest in about 5%, if some 1% of the deals that they see, which means as part of one key skill set in investing is learning to say no. because you say much more no than yes, just because you walk out of a lot of transactions and because of the risk. That also might mean that you walk out of great investments that end up turning well, but you're not involved in it. But you end up saying a lot more no than yeses. And that's because if there's anything or any risk that you think you cannot account for, then you walk away from it. I think from the African context, one key thing that I forgot about is FX. FX is a big risk where you've raised money in dollars and then you're investing in a business that is generating naira. And then all of a sudden, the naira against the dollar moves from 500 to 1,000. What that means is without doing anything, you've lost half of your investment. Right. Just because, not because you're a bad investor, not because maybe some can claim that you're a bad investor that you should have sort of factored in FX risk. But not because you're a bad manager or anything like that. FX can also sort of wipe out from in one day, just like the way Nigeria just moved from whatever the naira was to 1,003 or whatever it is today. So those kind of things affect things. And to give you examples so that you can at least feel a flavor of, okay, these are things that have happened. I don't know if people knew the fact that there used to be Virgin Nigeria. And at the onset of Virgin Nigeria, African Capital Alliance, which is the firm I worked at, invested in Virgin Nigeria. Virgin Nigeria doesn't exist today, which means African Capital Alliance lost all of their investment. And what happened there, this was government risk, which is something I didn't mention before. Right, Virgin Nigeria was a JV between Virgin, which is the British firm, private investors in Nigeria, including African Capital Alliance, and then the government was also an investor in it because it was supposed to be Nigeria's national carrier. And then you then had the government interfering as to what route Virgin Nigeria should fly to, right? And what that meant is if, for instance, it's not profitable for Virgin Nigeria to fly to Borno, the Nigerian government will be like, no, you have to fly to Borno because maybe there's one big politician that's from Borno and he wants you to fly to Borno, even if there's no money to be made there are no passengers to fly there. So what that eventually meant was that Virgin Nigeria said, okay, Virgin as the British firm, so we can no longer do this. So they pulled out. And what that meant was all of that investment got written down to zero, right? So in as much as, yes, you would see other investments, and like Ekoh said, what you want to do is to ensure that you don't have more than one bad investment on the private equity side. Because by the time VC firms can afford to have, in fact, VC funds can afford to invest in 10 things and all 9 go wrong. One can cover up for all of those losses. But in private equity, if you have more than one loss making investments, then you're probably in deep trouble. And the deep trouble is it means you will not be able to raise a new fund. So because the way private equity fund, as Ekoh said earlier, is you raise a fund with the intention of at least making 2 times of your money on that, and then returning that capital to investors, and then you raise another fund. And hopefully what you want to do is to raise a larger fund than the previous one you've raised. But all of this is subject to you being able to make good returns, where you want to beat your order rate, right? And order rate, for those who don't know, is more like the target investment returns that investors are expecting. And usually you even target over and above that, because usually order rate is around 8% IRR, but usually investors expect it to be in the double-digit figures, high double-digit 20% IRR figures. And if you're not eating that consistently, that means you're not able to raise a new fund. And if you're not able to raise a new fund, it means you're out of business. So, and there have been several private equity firms that have had to sort of fold up as a result of that. So what you want to hope is that you have more winners than losers. So it's fine if you have at least one bad investment, but you want to hope that you have more great investments that will make up for at least one of those bad ones.
Okay, good. Let me start taking questions from here. I will just start from one here. One said, okay, I think you already answered this one, Dolapo. You mentioned the difference between private equity and venture capital. Also, someone said, what's the difference between private equity and asset management? And I just want us to take as much questions at once as possible. So the other one is, does a PE firm act as an asset management company for these businesses during the period of investment? So we can just take any of those questions. We'll just be asking them in threes and continue the session.
So PE asset management, I say PE is a form of asset management in terms of what you would see in Nigeria, Africa, asset management firms. They manage you and I's money. We've put money in mutual funds of different kinds, and they just manage that both administratively and investment wise. Private equity is essentially the same. You have limited partners who are the DFIs, the big pension funds who are giving you funds. Your job is to manage this, invest it, and ultimately return these funds with a return back to them. So it's essentially the same thing. The big key difference is that in terms of private equity, you are investing in private companies. So and then you're also a lot more involved directly. So you'd have a seat on their board. You are involved in strategic decisions. You might in some instances, you are involved operationally. You might have to second some of your employees to go and work for these investee companies that you've invested in. So private equity is, I would say, is a lot more direct. Asset management, a lot of these mutual funds are invested in public companies where they have no involvement in the day-to-day runnings of these companies. So I would say the key difference is just the level of influence you have on the investment, and then the size, obviously.
So if I'll just add to that, it's just viewed as private and public side, right? Private equity, as the name says, meaning you're investing in private companies. Sometimes you invest in public companies, but you take them private, right? That's private equity. On the public side, which is what we all know as asset management, you're investing in public companies, right? So that's essentially the difference, private and public.
Okay, just to add more color there, for people that don't know what private and public companies are, public companies are companies that are listed on the stock exchange. So like the Nigerian Stock Exchange, we have the financial institutions listed there. Those are public companies. Private companies are the ones that are not listed, essentially. So that's like the key difference. So a question here, someone mentioned that given your experience, I think this question is directed to Ekoh. Dolapo, you can also weigh in here. Given your experience, following your description of layering experiences towards a career in PE, is there any chance that working in certain finance roles along the journey could hurt your long-term goal of being like, a private equity analyst? Case in point, someone in the audit practice of a big four aiming to transition to a PE role in the near future.
Dolapo covered it perfectly. It's just 2 points I would like to just touch on in terms of one, these jobs are essentially looking for the best of the best. So it can't be a case of you are just interested in these types of jobs because of the remuneration package or the benefits you're going to get out. You have to be passionate about these things, investing, finance. So the first thing is just search for the skills that, as Dolapo said, just those foundational skills you need to be able to be competent in the role. Research, Excel, PowerPoint, putting together presentations, things like that, because that's what differentiates you from the next person. My own journey was the CFA program really helped me in terms of I got into an investment banking job, and my first few months I'll be hearing conversations, nomenclature in the industry, and I have no clue what they're talking about. But the CFA program essentially helped me reduce that learning curve in terms of I was getting the theory while doing the practical in the day job. So be passionate about learning. You need to be proactive. You need to search for the skills. And ultimately, it's not the private equity job. Don't think of it in terms of the end in itself. It might take you 5 years to get there. As Dolapo said, you rarely find private equity firms that are recruiting school leavers. You might have to break that journey into okay, first I might go to an advisory KPMG PwC firm that nurtures you, gives you those foundational skills. You might do a year or two there, then go to an investment bank that helps you think about doing deals, advising companies, introducing you into the mergers and acquisitions landscape. That adds additional skills to your capacity. Then you might do another 2 years there, and then finally be ready to be a private equity or an investment professional. So don't think of it as something you need to get right from leaving school. It might be a journey, it might be 3 years, it might be 5 years, but as long as you're passionate, as long as you search for the skills and continue to better yourself every day, I think, and you are a hard worker, you are a quick learner as well. I think it's an industry where it will be right for you.
Yeah, thank you very much, Ekoh. And to even put more context here, the reason why these things they are saying is very important is because this is investment. Essentially, people have their money, people have skin in the game, and they are putting it into this business. So it just makes sense for whoever is going to be in charge of the processes that lead to investments to be passionate about it, to be a hard worker, and to really be very thorough. Because mistakes here are in dollars and cents. It's not where you make a mistake and you tell your boss, I'm sorry. It's a mistake that leads to, like, there are catastrophic consequences when there are mistakes. And one of those mistakes is what we want to actually talk about. In your experience, have you seen any private equity deal go bust? You might just talk generally. It doesn't have to be from your personal experience. Just talk about a private equity deal that actually went bust, so that people will understand like what is at stake and why it's important to really put your best foot forward.
I'll say no. So in terms of, you being in audit, understanding financial statements and understanding how these companies operate is essentially your bread and butter. You still have the general understanding of accounting, finance, that the next person will have. The only aspect you might be missing out on is, the investment side of it, learning about investing in companies, valuation, which you might still have gained as part of your university degree, or maybe you've done a certification or program afterwards. So as long as you are you have those familiarities with finance, accounting, and as Dolapo said, you might even be there. I've seen lawyers that are great investment bankers. I've seen engineers that are great investment bankers. So I wouldn't say your current background should limit you, as long as you have the willingness to learn the requisite skills that you need for investment banking and private equity. I don't think you are limited by what you are currently doing.
Yeah. What I would add and say is, think of it this way. I think people are very lazy when it comes to recruiting. And when I say lazy, is people don't like to take too much risk, right? So they essentially, if people are used to hiring bankers, they normally will just go for bankers. There are some firms where they're like, oh, we like people from KPMG. You just say that usually their first point of call is just go for KPMG. So I think the first thing you should do is, one, check out for whatever private equity firm or even investment bank you want to work at. The people there right now, where did they come from, right? Second thing you want to do is, are there folks who have worked in audit and are currently in investment banking or private equity? What you'll find is those kind of people can identify with your challenges when it comes to recruiting, right? If you're talking to someone who's done audit before, they can very easily give you a chance versus someone who all they've done is banking to private equity, right? And to also then understand why people might not want to hire you in terms of what they might see as your shortcoming, and then how can you fill that shortcoming, right? Because people always exaggerate, and people always there's a lot of time that people generalize. People will think, oh, auditors don't know XYZ, but it doesn't mean you don't know XYZ, right? So it's then left to you to prove that, you know what, maybe auditors truly don't know XYZ. Maybe auditors don't build financial model, for instance. It's then left to you to then show that and demonstrate that, you know what, okay, fine. Maybe auditors don't, but I know how to build this financial model. So you need to sort of find out, okay, what are the gaps in your skill set, and then how do you sort of fill that? Maybe it's PowerPoint. Maybe normally auditors don't do PowerPoint. I don't know. Then it might be a case where you're like, you need to demonstrate. So you know what, I have all the skill sets that you're looking for, and that's what usually when people hire people, I want to hire someone that will make my life easier. Problem in private equity is there's no time to train people. So you want to essentially hire people who at least have the very basic skill set that you can then lay on top of it, that they can learn on the job. But you don't want to, there's no time to train people essentially, because again, most private equity firms, especially in Nigeria, maximum there are 50 people there, right? So versus if you look at a KPMG and PwC or even investment banks that might have more people. So what you then want to do is to ensure that you can show that, you know what, whatever shortcoming you think I have, I already feel it either by learning on my own or maybe I even did it on the job. So and also be flexible, as Ekoh was saying, you might not be able to transition straight into private equity. It might mean you need to go first into banking and then from banking transition to private equity.
And just one more thing, just Dolapo's point just made me think of something else in terms of a lot of firms also, in terms of just their investment team pool, they like building diverse teams. So someone might be strong in terms of, you might see a consultant in the team in terms of, okay, this guy's bread and butter is value creation and looking at how companies work. You might see someone who has worked in banking, so he's very good with deals. Your strength in terms of audit is that financial statements, you can pick holes in terms of when companies send you stuff. So that might be your strength. So as well as learning your deficiencies or areas where you are weak, you also want to portray that, yes, this is what I bring to the team, and this is how I can help your investment team essentially do better.
Excellent. And just to put all this together, remember when Dolapo and Ekoh was mentioning something, you need to be a hard worker. I think there's a philosophical perspective to this. Let me just add my own layer there. If you want something, I think it's just your responsibility for you to go for it. Personally, I don't like listening to people telling me that, giving me generic advice that I cannot do something, especially when it's negative and I know that I want to go. I think it's just left for you to pick that advice, tailor it to your own side. This is what I want, and these are the gaps that are existing within my current skill set or within my current experience that is going to take me there. Put that in short-term goal, break that into short-term goal and just go. Because if you know that you're very passionate about private equity, why not just identify the things that you are missing, start filling those gaps, and then you eventually get there. That's the essence of programs like this. Just break those things into chunks that are achievable, and then you get your goal. My advice to you is that I don't think there is anything you cannot do. It's just left for you to actually really want it as much. All right. The other question here is, what's the relevance of professional master's degree in banking and finance and MBA in the world of investment banking? Which one between both would you advise us to go for? I think Dolapo, you will have more meat here. Master in banking and finance versus MBA for investment banking purposes.
So in the developed market, their recruiting is sort of tied to schools, right? So even for investment banking, a lot of times they recruit most of their employees from either undergrad or through the MBA programs, right? Similar for private equity as well. And that's one. So for instance, if you want to work in investment banking in the US, almost the only way is to do a master's in the US, right? Because except if one day some firm wakes up and starts hiring Nigerians, it's almost impossible to do it, right? So I would say that in terms of master's program, I think when you obviously get your MBA, because the advantage of getting the MBA is you come in as an associate or a senior associate at most firms, or even VP as well. But if you do a master's in finance, you're going to come in as an analyst, right? So that's one thing to be mindful of. If you're still young and you don't yet have work experience, you can do a master's in finance and come in as an analyst. But if you want to come in as an associate or senior associate or a VP, you need to come in obviously as an MBA candidate, either in the US or even the UK. The second thing to be mindful of as well is, and you'll see this online as well, breaking into private equity in the US is tough. It's not impossible, but it's very tough, which is why you probably would have noticed as well that there are not that many Africans from Africa who break into private equity in the US. And the reason for that is it's different reasons. One is sponsorship, right? Not a lot of private equity firms sponsor internationals in terms of getting work permits. So getting work permit is an international. For private equity is very difficult. Like I said, private equity firms are very small, right? Like my team within Morgan Stanley globally is just 65 people. So if it's just 65 people, and last year I was the only one senior associate and above that joined the team, right? Which also means that there's enough supply of people that want to do private equity. So why should they bother hiring internationals? So it's not impossible. What that means is you have to sort of differentiate yourself by way of either by way of your experience, or actually you just have to be better than everybody, unfortunately. And then also hope that luck smiles on you during the interview such that they're asking you things you know. Because again, no one knows everything. You can prepare and get into an interview, and then they just ask you a bunch of questions that you have no idea what it means. So I think the other final part, and I hope I'm answering that question, is I would say if you want to do private equity in the US, my advice would be to either go to Wharton or Harvard. And that's because most private equity firms have target schools. And unfortunately, it's just these two schools for the most part. Whereas if you go to some schools, it doesn't mean if you go to some other schools, you won't get it. But it's just that based on history and based on what have happened in the past, a lot of people will, especially not Americans, who successfully recruited for private equity, have either gone to Wharton or Harvard. And that's just because there are a lot of alumni from these two schools who are working in private equity. And then because of that, like I said, people are lazy. So if we've recruited historically from Wharton and Harvard, so why should we go elsewhere? And for them, it's just a case where if we can interview 20 people at Wharton, 20 people at Harvard, and then we find one person that we want, why do we want to interview the entire world if we're just looking for one person, right? So that's why typically our advice, go to Wharton or Harvard if you can. If you don't get into Wharton and Harvard or Harvard for your MBA, that's also fine. What you then want to do is for whatever school you eventually get admission to, you want to find out what's their success rate at placing people into private equity, right? And then you also have to be flexible. So say, for instance, you don't get private equity, you can go into banking or consulting and then find your way back into private equity. Like I said, life is not linear, right? So if you don't break into private equity at the first time of trying, or if you don't get into Wharton or Harvard, that doesn't mean that your life has ended and then you should not continue with life. So I think one key thing about life, you should have to be flexible. Like I said, I did 2 internships at Bank of America. I didn't get a return offer because of visa issues. I didn't say, oh, that's the end of it, right? But again, I knew I wanted to do private equity in the US. I found another way to do it, right? So another way could be it could even be you going to another school and then fighting hard. As testimony was saying earlier, nothing impossible is nothing. Even if no one from that school has ever done it, you might be the first. So why not? Then the last thing I want to say is if you know that you want to do private equity in the US post MBA, then it is advisable to have done private equity at least in Africa before coming to the US. So because that way they know that okay, you've done it before, you've just done it in a different market. And usually what happens is because they don't know the African market, a lot of times you then have to educate them and say, hey, we do the same type of things you guys do. It's the same Excel, it's the same PowerPoint, there's no difference. And I've done it before. And so you don't need to train me or anything like that. I've done it before. So I can do it again. So I think those are some of the things I would advise.
Thank you very much. I think this is actually very, very important, especially given our audience. Thank you very much for that. So there's a question. I think you've already answered these other questions. So I'm going to just keep it. Good. So, okay, the other question I wanted to ask is, what's like the career trajectory from, say, analyst to like the peak within private equity? What's like the trajectory? What does it look like? And what does promotion look like? How many years does it take? And if there is anything like exit opportunities after a career in private equity, what does it look like in your experience?
So I'd speak for Verod where I work. In terms of roles, we have analysts, we have associates. Obviously, between those cadres, you might have, a senior analyst or a senior associate. Then you progress to become a manager. Then you progress to become a VP, vice principal, or / principal, and then you become a partner. Obviously, at each of those roles, what you're doing as an analyst is not what you'll be expected to do as an associate. So at each of those roles, you're also developing a different skill set in terms of your analysts might be people doing your research and analysis, but at associate manager level, they're thinking of you towards more value creation. How are you looking at it from a portfolio or fund perspective, rather than just your deal or your company that you're managing? And then obviously, as you progress, there's a greater expectation around deal origination. You wouldn't expect a partner to be bogged down doing Excel at 2 a.m., that sort of thing. In terms of progression, it's really, you get what you put in, really. If you're really good, you can get promoted almost immediately, 6 months, 1 year. And it's not one thing I saw immediately I came in, it was that if you work hard and you show results, you can progress relatively quickly. Also, there's no ceiling in terms of your development. You can do whatever you want to do. If you come in as an analyst and you're showing capabilities that you can, do well as an associate, they'll promote you because you've demonstrated that skill set and that ability. And if after another year as an associate, you've demonstrated that, you're operating at a higher frequency or a higher level, they promote you as well. In terms of, I think the last point you made was around exits. You've seen people do, private equity is one vertical. You can see people exit, they want to try their hands at, something else. It might be still investing, but they might want to do infrastructure. They might want to do maybe something more thematic to say, okay, I've been investing in, a certain type of transaction. I want to do more, climatic or climate focused deals. Or I want to do more, gender lens investing. They could also go back to school, do an MBA or so. The exit routes are limitless. It just depends on what you want to do personally.
Yeah, I can add to the exit. I guess in the developed market, sometimes you find folks will go to an hedge fund from private equity, right? And hedge funds are essentially people who invest in the public market, but also using leverage or debt, very similar to private equity. Or some go into activism, which is also a form of private equity investment where you're more active and you're trying to make the management team make some changes that obviously will make the share price appreciate. So people go into hedge fund. A lot of people go into entrepreneurship as well, right? So because again, if you think of private equity, you're only investing. Most times you're not doing the day-to-day running of the business, right? Except if you're seconded to the portfolio company. So some people want to try their hands on entrepreneurship. So I've seen a few folks, I had a few classmates who did private equity before business school, and then now post MBA, they started their own companies, right? They want to try their hands on stuff. So yeah.
Excellent. All right. Okay. I think from the pool of questions we have, we've actually covered everything I have. So I'm going to open the floor now for Q&A. If you have questions that we've not touched on, I think now is a good time to just raise your hands for okay. I just want to get like 4 or 5 hands before we start before we start calling you up. So Dolapo, I know that you went to get an MBA after doing private equity in Nigeria, and then eventually transitioned into private equity in the US. In your experience, is that essentially, okay, I know you already mentioned it, but is that essentially the transition point for people that are coming with their experience in Nigeria to the US?
I'll say most people end up in consulting or banking, which those two careers are most likely the highest employers of MBAs in the US or even the UK, if I put it that way, or even Europe in general. So most folks who do MBAs end up in consulting, banking, and then tech, the Googles, the Amazons of this world. So that's a very common route. And then obviously you then have a few folks try to do private equity as well. So yeah, but I guess the key thing to note though is that very often than not, people that end up in investing or private equity investing, they've done private equity before, and then most PE firms don't want to train, right? And even if they want to train, it's just a case of think about the number of people who've done private equity before that are coming to business school and still want to do private equity again. So there's already enough pool of those kind of people for them to then take risk. But it doesn't mean it's not impossible. I'll give you an instance. So if, for instance, you were a medical doctor before business school, right? And as Ekoh was saying, your value add could be going to an healthcare investing or healthcare private equity firm to say, hey, maybe I don't know much about investing. Maybe I don't know as much as someone who used to work at Blackstone or Apollo or whatever. But I used to be a doctor, so I know healthcare more than this person. And maybe you've trained yourself, hopefully, in corporate finance and other skill sets. Then you can try and convince them based on that. Or you used to be an engineer, maybe you used to work at an oil and gas company. Then you could walk to a private equity firm and say, hey, I'm willing to learn. I'm humble enough to learn, and I'm humble enough to know that I don't know X, Y, Z. But hey, I've worked in oil and gas for 5 years, 6 years. I definitely know it better than any other person. So, and then that's my value add. So that's what I'm saying, that it's life is not linear. It depends on, you need to find your own angle, right? So, and that's the very key thing. So, for instance, for my summer internship, as I said, I was doing real estate private equity at Brookfield. And my angle then is I've done real estate private equity. I've done some real estate investing when I was in Nigeria, right? And real estate anywhere in the world is the same. There's no difference. If you have a mall in the US, a mall in Imo State, same thing, no difference. The tenants might be different, but the way it works, the fundamentals don't change. So that was my angle then for getting that job over the summer, right? And then obviously for private equity now, it was more a case of, hey, if Brookfield has taken a bet on me, which is the second largest private equity firm in the world, then who are you not to at least take a bet on me? So at least that then helped me sort of get a look in terms of getting interviews at firms that typically would probably not have taken a second look at my resume. So I'll say it depends on your angle. You just need to find your angle. It might be a sector that you're good at that no other person knows it. Or it might just be a case where maybe you're the best modeler, Excel modeler that exists on Earth. And then, yeah, you can go for it.
All right. Okay, good. I think we'll just start taking questions. Afolabi Azizat, you can go.
Hi, good evening. Thank you so much for this session. So, my question goes to Dolapo, right? So, you are coming from investment banking, and we understand how taxing the workload of investment banking is talking about the work-life balance. So, how would you describe when we're an investment banker and private equity? Does it get better, or is it like the same workload? Like, what's the work-life balance like? Thank you.
Yeah, sure. I'll take that. It gets better on some days. I'm happy to. It gets better. So if you remember earlier, I was saying that you've paid your dues, right? So in banking, especially because most times we're analysts in banking, right? So it means that whatever work no one wants to do, you have to do it, either you want to or not. I'll give you an example. Back then in Nigeria, when I was in banking, there was a Sunday where I was about to get into church, and then my manager, the MD of my team called me because we needed to file some documents at the SEC the next day. And then I had to go to the office, right? So I didn't go to church that day. And I was at the entrance of the church before he called me, right? Today, that wouldn't happen anymore because even if someone calls me, there's someone else who's an analyst on my team that I'm calling to do the work, right? If you get what I mean. So which means now my hours are better. I think on average, I probably work 9 to 7. But obviously, there are days where we need to take deals to investment committee. And then I'm probably working to 12. I think I've done it 2 a.m. since I started this job as well. So it varies. The only difference is with private equity, your hours are predictable. So you know you're going to investment committee in 2 weeks. So you can tell that, oh, maybe the next 2 weeks I'm going to work crazy hours. And then once that is done, my hours are much more predictable. I'm back to my 9 to 7. Investment banking is not predictable because your hours are dictated by the client. So if a client calls your MD on a Sunday afternoon, hey, I have a board meeting on Tuesday, can I see X, Y, Z? It means that your Sunday night and your Monday is messed up already because your MD has to deliver because that's how they get paid, right? So that's the difference between investment banking and private equity. Unlike private equity, where for the most part, it's just your LPs who are your investors who can essentially mess up your day. But that rarely happens because usually there's a report that you send to them every quarter. So they know the cadence of that reporting. You know the cadence of work. You know when you get started on a deal. You know how long it takes before you go to IC. So your hours are very, very predictable. But unlike banking, where your clients, essentially whatever your client wants, you have to do it, right? But it gets better as well in banking because the more senior you get, it means that there's someone else below you that needs to do the grunt work that you don't want to do.
Excellent. Bello.
Good evening, sir. Please, while you are making the presentation, I heard you talking about the M&A risks and so many departments concerning investment banking. And I've just got an opportunity to start an internship as an investment banking intern. I would like you to please tell me more about the kind of divisions within the investment banking so that to put it at the back of my mind with the area I'm going to be specializing on to pay more attention. Is it M&A department, risk department, or something like this? And was the person trying to be in private equity? How could I build the process with an internship opportunity I have? Thank you.
Does Ekoh want to answer that?
Okay, sure. So in terms of investment banking, congratulations for first of all getting the role. My experience, you typically have your capital market. So first of all, that's essentially just advising companies on raising money in the capital market. That could be on the debt side where you're raising bonds, so more long-term instruments, or short-term instruments like commercial paper. Those will typically be a deal might take 1 to 2 months to put together, get into the regulatory process, and you go to the market. People invest, and then you close and you book your fees. On the other side, you can have equity capital markets where your Access Bank wants to buy Diamond Bank, and you're advising either on one side, either you're advising the buyer or you're advising the seller on just things like valuation, helping them file regulatory documents, and the legal, and coordinating essentially both the financial and the legal side of it. Then you have you can have some restructuring or just general transaction, corporate advisory type of deals where, for example, you see a client, you look at their balance sheet, there are more ways they can optimize their capital structure, and you're just essentially advising them on how they can be more profitable or be more cash flow generative. So that would typically be your restructuring side of it. So I'll say you have your capital markets, debt and equity, and then you might have some more nuanced types of transaction in terms of corporate restructuring and those types of transactions.
Okay. Olatubosun, you want to go? Then Kingsley, you just go last.
Good evening. Okay. Good evening, everyone. Good evening, Mr. Dolapo and Mr. Ekoh. Thank you so much for this session. It was very insightful. So one thing I got from you guys is if you don't learn, like one thing I got from this session is you don't learn in private equity or you end part in your career by chance. You have to be intentional. And I was kind of reflecting, like I was kind of reflecting why you're taking this session, and I realized that I don't have like a proper structure like regarding my career. So I just pick up things, I just pick up opportunities, I pick up what's it called? Things I think that I think will be needed without actually have like a good motivation behind it. Do you have like the measures or like an advice or resources you think that can be useful in like helping me, like that can help me structure or like plan my career?
Okay, I think I got the question. If just to be sure that I got you correctly, you are in a stage in your career right now where things are a bit fuzzy, and you're looking for advice on how to structure your career path to meet your goals. Is that it?
Yes, yes, sir.
Okay. I don't know. Either of you can take that question, maybe generally in what you've done in your career that helped you.
Yeah, I can talk about my personal experience. I don't think there's any book that can tell you how to structure a career. I think one rule of thumb that, and I think I've said this earlier, you can't be what you've not seen, right? So one thing I go with is whatever I want to be, I look out for examples of people where I want to be, right? And then walk back, what did they do to get there? right? So sometimes you might get a chance to actually sit with them. It could be your manager who maybe your manager is already a partner at a private equity firm, and then you're asking them, what do I need to do to become a partner? Because maybe that's what you dream of. But it might be someone else who is working at a different firms. I mean, at different firms. Then if you're able to, you if you're lucky enough, you can get a sit down with them. And if you're not lucky enough, I think what I do is I watch a lot of interviews, right? And I read a lot of biographies, right? So, and the reason why I do that is essentially when you look at this world, you find out that the future is almost a representation of the present, and the present is a representation of the past, right? So what that then means is if people have gone through certain pathways to get to where they want to get to, obviously no two lives are the same. But if you take an average of 5 different individuals and see how they got to where they got to, chances are that you probably need to do one of those things that they've done, and then find a way to sort of adopt that into your own either career path or lifestyle as well, and then you get there. It's a case of if Messi is the best footballer that I ever lived, what else to do than sort of find out what does he eat, what are his training routines, what academy did he go to, do I need to go there as well? So things like that. So that's what I do, and obviously the way to get it is if you can go to events, then you can meet people one-on-one, which I have done a lot of times to just sort of meet people who are doing what I want to do in the future and then learn about them. And a lot of times I can't tell you how many interviews I listen to every week. And then also autobiographies and biographies. Those are my favorite as well, where you just sort of learn what have people done and how did they get to where they've gotten to. So I would say that would be my advice.
Yeah, couldn't agree more in terms of just what Dolapo said about think of it, what do you want to do and plot essentially how you get there. The only thing I would add is just, if you can seek out mentors, either directly in terms of these people, you sit down with them and they can help you structure, okay, this is what you need to be doing now, these are the next level of skills you need to get to progress in from where you are today to where you want to go. Or that could also be indirect in terms of going to industry events. I know there are a lot of private equity events in Lagos annually. Just being involved in the environment, meeting different people, sharing knowledge, they might be able to guide you. You learn from people's experiences as well, and it just helps you shape your mind in terms of, okay, now I'm clearer on what I need to do to be able to get to the next level.
All right, and again, to add to that, one thing you want to do, Olatubosun, is I knew that taking a step to be on this call means that you're already taking those little steps to clarity. Because from what I hear you say, clarity is essentially like the problem. It's not like you're not making those efforts. There's the fact that you want to be sure that whatever bets or whatever steps you are taking is in line with where you want to go to. But being on calls like this essentially means that you're already curious. And I'm quite sure that there are a couple of things you've heard. Let's say your long-term goal is to get into private equity. You've heard some things that are very valuable here. You've heard, like Dolapo mentioned, that he had to start like getting some kind of skills, like financial modeling skills, Excel skills, PowerPoint presentation skills with, I think he mentioned Talent Mine. At least just getting those rudiments. And then Ekoh mentioned that he started the CFA and essentially just found his way into investment banking, learning some things like even putting down your CV together and all those kind of little things. So for me, it's about getting those basic rudimentary details in the beginning, because to be very, very realistic, when you reach out to, say, senior people, especially if you're in an environment where you don't know them, maybe as a fresh graduate, many of them might not really listen to you, and for good reasons too, because some of the advice they might be giving you at that point in time, you might be down the line. So you want to solidify your foundation, get to do these things that you can easily do, attending meetings like this, gaining some skills to just get some kind of clarity in the short term. Again, getting good grades in your school might also help at least stand you out when you eventually are reaching out to these people. So just essentially enjoy your present, do the present things well. If the next step, you are very sure about finance, you want to actually if you can help it, you want to start writing some of your professional exams. Again, these things are just to make you look serious in a way, just so that you are maximizing your present, and then eventually probably get that first job step by step. step by step, you'll see that clarity will just keep coming. I don't know if that might help your situation, but say you want to structure your career from day one, it might not be that you need a book or a guide. It might not really work out directly, because no two career generally, like, I don't think people have the same, people have linear experiences to where they are going to. Your own experience might be totally different, but you want to like do the foundational thing very well, getting good grades, learning some of these foundational skills. If you're sure of a career in finance, maybe getting an internship or getting a first job, and then you just progress from there. I believe that these are things that can take you closer to clarity than getting a book that just itemizes everything. As the Dolapo said, you want to read biographies. I watch biographies a lot. I'm more of like a video person. I consume a lot of biographies about people that have done things that could potentially want to do. Maybe Warren Buffett, Bill Ackman, those guys that have actually done stuff. You want to like be reading them and see, oh, this is the path that they are taking. Okay, I think it makes sense. Oh, they went here. Oh, they went here. They went here. At least from the beginning, you are getting like some kind of basis that can be getting you closer to when you now have a sit down with these people, or when you are shooting them an email, they can probably like listen to you and you get more clarity. What I'm just saying is that you don't want to be reaching out to these people from the point of zero. You want to like don't like move from 0 to 1, done a couple of things before like you reach out, so that you are getting more value from there. I think this is going to be like the last question. Kingsley.
Okay. First of all, I want to thank everyone here for the opportunity. I want to thank Dolapo and Ekoh for the opportunity. It's great having you guys on the call. I have two questions. The first one is about the CFA exam. My question about CFA: can you survive, like pass through investment banking, private equity without actually doing the CFA? Like, are there some people that actually scale through from the start to the end of their career without doing the CFA and instead opted for the MBA? That's my first question. Then my second question is this: I've been going through profiles of people that are in maybe Big Four advisory, investment banking, private equity on LinkedIn, and most of them are always top students, first class, president of NOASA, president of finance club, tax club. So for somebody with a 2-1 and a kind of average profile, what will you advise that kind of person competing with these top guys, first class, and the rest?
Perhaps I'll start and then Dolapo can chime in. CFA, yes, it's good, but it's not mandatory in terms of, as I said, I used it as more of a learning tool. It definitely helps broaden your mind in terms of understanding finance, understanding concepts, understanding the theoretical aspects of it. But you still have to bring that theory into the practical and bringing it into your day job. So it's not you will see investment professionals who are seasoned without CFA. It just helps, differentiate you from the next person in terms of if I'm hiring and I'm interviewing two people with the exact same performance and academic record, and they have everything else that is the same, and I have a CFA candidate and one that doesn't, it might just help you differentiate yourself from the next person. So it's not mandatory, but it certainly helped me. And I think at the very early stage, it certainly helps broaden your mindset and horizon. And then the second question is that yes, these are high demand jobs. Most people would look for the best talent out there. So, your academic record, your previous experience. But what I would say is that as long as you can demonstrate, okay, I didn't get a first class, but after university, I have gone through this X amount of training to be able to develop my skill set. If I'm hiring somebody and I see a first class candidate and a 2-1 candidate, that's not going to be the determinant of who gets the job. You both have to still probably go through various level of interviews, various level of case studies that you have to do. So if you have the skills, even though you don't have the perfect academic record, I don't think it's a drawback. So just go after the skills and try and better yourself so that you can stand shoulder to shoulder with the next person.
Yeah, I'll add to that. If any consolation, I didn't finish with the first class, so I graduated with a 2-1. So if that gives you some consolation that it doesn't matter, that you can still do it, yes. I guess the only other thing to add is people usually like to hire people who are smart but also personable, right? Even if you're the smartest person on earth, but I can't stand just sitting next to you for 5 minutes, then I'm sorry, I'm not gonna hire you. I don't care if you can do multiples of 4 up to the 1,000 degree in your head without using a calculator. But if you're not personable, right, then which is why you'll find that for every interview, there's something called fit questions, and then there's technical interview questions, right? The fit question is to see what kind of person you are, because again, finance is a people business, right? And at every point in time, you're trying to connect with people. Either as an investment banker, you're trying to win a deal. What might win you that deal might be you guys talking about the French Open, which is going on right now, right? Or it might be you guys playing golf or something like that. Same way, if you're as a private equity professional, you're also trying to win over the founder of the company as to why they should part away with some equity or even sell their business to you, right? So being personable is almost as important as you being smart, book smart, right? So you want to be a balanced student. Obviously, if you're still in school and there's still a chance of you graduating to the first class, please, by all means, get that first class. But if it's too late for you, and if it looks like what you have is a 2-1, then obviously, as Ekoh was saying, there are other things that you can add up to yourself, right? If you're still in school, by all means, please volunteer and do things, right? You don't have to be president of something, but just be actively involved in leading people, because those are skill sets that you'll be shocked about the things that you learn, and then they become part and parcel of you forever. So you don't want to be that student who's just a first class graduate, and then there's nothing more about them. They don't have any interest. And I know I've seen resumes where people are like, what are your interests? Or I only go to church and I go to work, and that's it. Don't be that kind of person, right? It might be anything. It could be football. You don't have to do something else that other people are doing. Just find your own interest. It could be tennis, it could be football, it could be movies, it could be traveling, it could be hiking or whatever. Just make sure that there is more to you than just the normal fundamental things that people have. They could be watching movies. You could be someone who knows movies like no other person knows it. And you'll be shocked that you go to interviews and you can spend 30 minutes talking about a common interest with someone else. And off the back of that, because they've connected so well with you, obviously you tick the other boxes in terms of either graduate first class or 2-1. But like Ekoh was saying, you just need differentiating factors, because again, these are jobs that maybe they only need to hire 1 or 2 people, right? And hopefully, if you made it to the final round, you're probably equally as smart as any other person. So, which means, okay, what else am I gonna? I mean, what will be the differentiating factor between you and every other smart person? Then when your own personal interest is, what are the extracurricular? Were you the football captain, or were you all rep or whatever? So you don't need something else other than just book smart, because book smart, yes, I can see you're smart, but then we're not going to be talking book when we both need to work up till 1 a.m., right? I need someone that's personable, someone I can connect with on a human level, right? So that's why I would say that in as much as, yes, you want the academics and the book smart, you also want to be personable and other skill set, personal skill sets that you can develop as well over time.
Yeah, thank you very much, Dolapo and Ekoh. That really makes sense. And
as an example, at that point, Dolapo just made again in my partner level interview in Averod. Say the interview lasted, I don't know, 40 minutes. 35 out of the 40 minutes we're talking music, sports, really nothing technical. So it was just a case of, she was like, if I'm going to be on a flight with you for 1 hour, I need to know that we can get along and we'll be able to, stay in the same place for that long. So just backing up the point Dolapo made.
yeah, thank you very much for that. So thank you very much, Dolapo, Ekoh. It was really good having you guys. And Kingsley, just like Dolapo has mentioned, myself, like, I didn't have a first class and I went to KPMG. In fact, getting to KPMG was like, that was the first time I was hearing about it. Just to give you more context, I think the Nigerian system is a bit favorable to you guys. Once you have a 2-1, you're fine. I think they just get everybody. So the things you want to like invest your time in is passing the GMAT. I don't think that has changed. just being able to scale through their, at least at the entry level. So the presidency and the other things, I think they are less important than, again, they are important, but they are less important hiring in Nigeria at the entry level than you being able to ace standardized tests and just that interview process and the rest of the interview process. So that's what you want to like focus on and build yourself on. If you have already passed getting a first class or doing those extracurricular activities. I just wanted to add that for you, so you're safe. You don't need to like, just think about it. Yeah. Good. So I think we've come to the end of this particular session. I don't know, Dolapo, Ekoh, do you have any final words for our audience for call it a day?
I could go first. I would say you can be anything that you put your mind to, honestly. I know that, yes, a lot of you guys will look at us and feel like these guys know so much or not, but trust me, if you met me in my second year of university or even first year of university, the only thing I had was obviously passion and maybe I was a good student or something like that. But other than that, where I am right now, I'll say it's God's grace and then hard work, right? So I would encourage you to say, hey, you can be anything you want to be, but it won't come to you on a platter. You also have to go for it. So people say hard work will eat talent for lunch, and that's true. So even if you're smart and even if you've got God's given talent, you also need to work hard and put your mind to it. But you can be anything, trust me. And again, no one in my family has ever worked in investment banking or private equity. So I'm the first to do that. So that tells you that it's not everyone that knows people. All the jobs I've worked at in my life, I didn't know anybody. And I worked in Nigeria at several firms. So don't think, oh, because I don't know anyone, don't make that excuse. You need to go for it, and you can get it, you can do it, but you have to be hardworking. And there'll be failures along the line, right? There'll be things that you want to get, and they won't work out. Be flexible, keep going, don't give up, and hopefully I run into some of you in the future and at big places doing great things. Thanks.
Yeah, and similarly along the same lines, most private equity firms, even if you know somebody, that's not a determining factor of whether you get in or not. It's not the partner that brings in your CV that will interview you. At various levels of interview, it will still come down to other people within the team. So I'd say be curious, be hardworking, learn the skills, be passionate. Don't be. Verod wasn't my first application. Let me just put it like that. I had gotten rejection emails from various firms before getting into private equity. So if you get a rejection email, what I always tell people is it just means it's not your time. Put in the work, be proactive, and then always try again. Last point I would just say is, if you need advice, if you need somebody to bounce ideas off, I think I'm available on LinkedIn. Please don't reach out to me asking for a job because I can't hire you. But if you are in an interview process or you just need somebody to speak to about advice or things, please feel free to reach out, and I will do my best to respond to as many of you as I can.
Thank you very much, guys. I really appreciate joining this call. And guys, to this, we call this a day. Thank you, Dolapo. Thank you, Ekoh. It was nice having you here. And to everyone here, do have a lovely day.